the FTSE Russell. Really good to see you. $500 billion the UK markets have lost. That is absolutely phenomenal. I actually was reading that, some people are saying, this kind of behavior of markets and currencies is what we see during an emerging market crisis. Do you think the BOE should be intervening?
I think they've started to intervene, haven't they? And at least they're now coordinated with the Chancellor. They're talking together and they've started the process of talking to the market. I think the market will expect more. I don't think they're doing enough. I think they've stopped the fall for now, but sterling looks weak. And I think it will continue to look weak until they can see what the plans are from the Chancellor in terms of how he's going to pay for this in debt, and also from the Bank of England, where they want the bank to take a stronger position in terms of rates to control inflation.
I was looking at the credit default swaps, and we know that those have risen sharply, even though the probability, and let's make that clear, of default remains low. Isn't that quite significant in terms of the trajectory that, what the messaging is here? Like, hey, listen, we are worried about what, this debt is going to look like, how we're rating your debt, and whether you'll be able to pull yourself out of the hole that you've dug yourself into.
Yeah. That's absolutely right. I mean, the market is saying they are worried, and they're saying they want to see the plans for how the government is going to deal with the debt situation. It's taking on a lot of debt to try and stimulate growth, and the market is a little bit cynical about that growth, whether that growth will be achieved soon enough. And how the government is going to fund this debt now. I mean, we're talking about a debt level which is almost 100% of GDP. I mean, so it's very high levels. There are some countries which are higher, but not many.
Okay, Mark, do you think this is a good time to actually go in and buy UK stocks? Do you think that this has just been an aggressive, knee-jerk reaction that isn't warranted?
I think the market's been surprised. You've got a new Prime Minister, a new Chancellor, and they've had a mini budget, and this has been anything but mini. And I think they've surprised the market. And therefore you've seen this reaction from the market. And markets do not like surprises. So you've seen a strong reaction from the market. And the market is now given a very clear message that it wants to see the plans. Only good surprises, yes. This wasn't a good surprise.
So let me ask you this. Do you think, can they backtrack on this? Is this done and dusted? I mean, let's put it simply. We're talking about energy subsidies, for example. We're talking about tax cuts. Can they say, well, listen, you guys are not taking this very well. Maybe we should backtrack. Can they? Would they?
I think that's unlikely. I think that's unlikely. I think what's more likely is the Bank of England will have to respond. And I think the markets are looking for a clear message from the Bank of England. At the moment, they're hearing the right language, but I think the market will want to see action. They will want to see rates rise, and rates rise significantly.
Yeah, I don't want to be a central banker right now. It sounds like there's going to be a lot of contagion, at least according to Larry Summers. Mark, really good to see you. Thank you so very much for joining me today.